What's going on, traders? Today I want to go over my weekly review, which I know a lot of times could feel a bit routine or even boring. But this particular weekly review, I really wanted to record and get it out there because, as you guys know, the market environment has really been shifting in the futures market, specifically talking about the ES and the NQ. In these types of conditions where we are constantly just making all time highs over and over and over again, that type of environment is really not conducive to my trading style, right? So, actually, what happened this past week, I've decided to shift over to a different market, specifically the FX market, because it is currently moving in a way that is favorable to my trading style. I know a lot of people, I'm not alone, who have a hard time trading all time high markets. In the past, I would just constantly be trying to short it over and over and over again, getting wrecked, blowing my accounts, blowing up months of work. And, after 4 years of market experience, I've just finally learned how to turn that off and accept that those markets are not going to give me favorable trading conditions. And I know that I understand technical analysis on a fundamental level enough to switch over to different markets if I could find valid opportunities. So that's why this weekly review I think is important to get out there, because I'm sure a lot of people have been feeling this. I mean, I've been seeing it all over my X feed of people getting blown out these past couple of weeks. So I want to get into that, go over the stats, and maybe show some trades that I took that I think are prime examples of why I have switched over to the Forex market just for the time being. It doesn't mean I'm going to stop trading NQ or anything like that. It's just right now I am finding edge in the Forex market. So I want to go over it and talk about, how I've been dealing with that. So let's get into it. All right, so let's get into the TradeZella stats here, and this is where things are going to get interesting. So I did not take a single trade on any of the US indices for this week. That's right, no NASDAQ, no S&P, no Dow, which is what I'm usually trading, right? Instead, I shifted my entire attention to the Forex market, and it was a bit of an adjustment, but it just felt right. The Forex market has been offering much more favorable conditions comparative to the indexes. So this is the data of that decision, and I want to go over it. So we had a net P&L of just under $2,000, and this was only taken. So these trades this week were only taken on the 100K MyFundedFX CFD prop firm account. I'm not one of those people who wants to show evaluation or combine profits in my TradeZella stats. Personally, I just don't want to do that for my videos. So these were all taken on that 100K account. Now, the win rate was about 38%, which is pretty large for me on a day-to-day basis. If you guys have been following me for a while, I'm usually trading a very low win rate, high R multiple trading system. But in the last, I'd say 2 months, I've really kind of switched that up, and I've been trying to increase my win rate. And to do that, I've had to sacrifice my R multiple, but it's really been it's been a lot less stressful. I've really been enjoying it. I used to be one of those guys who's always going for 6 to 8 R, and I'd have a win rate of like 25%, which just seems insane to some people, but the math did work. All right, if you're getting an R multiple of 6 or 8 R, you could totally be profitable with that low win rate. But I think this is just a natural evolution of me being a trader. I've been trading for 4 years now, and every single year has been very different. I have carried over foundational principles every single year that are similar, but I'm always evolving. And that's one of the things I love about trading is I don't feel like the work is ever done. It's like a never ending game of trying to tweak things and optimize to just increase your performance the best you can. And that's what I really love about it. So that's been a huge adjustment, is bringing that win rate up, lowering the R multiple, and just being less stressed, being able to get in and out of the market fairly quickly, take my 2R or my 1.5R sometimes even, and just being done and trying to keep that win rate up. So the profit factor was 1.63 and daily win percentage was 50%. So I did not trade any of my funded account on Friday. That was just evals. So again, not going to show that in the TradeZella stats. But Monday and Tuesday, so starting off the week, I was red, very small red, and that was very important to me. So I was trading pretty small size on Monday and Tuesday while I was adjusting to getting back in tune with the Forex market. I didn't want to just get in there and just hammer size on a market that I haven't traded for over a year. But as I got more in tune, I started to up the size. So you see that on Wednesday, profit of about $780, 7 trades total. And then Thursday, I was really feeling in the groove again. I was feeling like I'm in tune with the Forex market, and I hit it with bigger size. And that's really important for me as a trader. I really need my green days to be bigger than my red days. If I don't do that, it's going to just mess up my stats. And if I have blow up days, giving back a ton of profit and a ton of work, um, that is a serious detriment to yourself as a trader. So I still do that. Don't get me wrong. I have blow up days. I'm not perfect, but I am always striving to keep my red days as small as possible and keep my green days exponentially larger. So weekly profit just under 2 grand. And yeah, I'm really happy with the performance, especially because I've been trading this market that, for a long time, I honestly, I talked a lot of shit about once I moved over to the indexes. And now I'm realizing after all of this time trading that, you know, whatever market you're trading is not going to always offer you favorable conditions. I think a really strong skill set of a seasoned trader is somebody that could flip to different markets and able to see what market is offering them favorable conditions. And this is the first time I've done something like that in my career, and I'm really enjoying it. So going into next week, I'm going to stick to Forex. I'll, of course, watch the NASDAQ and the ES, see if there's opportunities. But if there's not, I'm not going to sit there and try and short the all time highs over and over again and blow up my accounts. I could happily trade Forex where the market is trending. So now I want to get into the charts. I'm going to show the NASDAQ chart and explain why personally it's not favorable conditions for me. And then I'm going to go over some of the Forex trades I've taken and talk about what currency pairs I think are really good, especially going into next week. So let's get into that now. All right, I know I said just before that I was going to go over the NASDAQ chart, but I decided it would just be a waste of time for this video. We all know how the indexes have currently been trading. They've been grinding up to all time highs, even in the overnight session, and then chopping around in the New York session, not having any follow through when they do make those all time highs. And it's just not a market that I could find any edge in, at least right now. So I want to turn your attention to the currency pairs that I've been trading. So I've been specifically trading the USD JPY and GBP JPY. So yen pairs is where I'm finding the most edge in right now. I used to love trading USD pairs, specifically like the Euro and the GBP USD. But right now, they're just moving a bit too slow for me. What I like about the yen currency pairs right now is that they are a bit more volatile. So they kind of give me that feeling of NASDAQ volatility, but it's on the Forex market. So, I mean, just look at this 4 hour chart on GJ. We're going to focus on GJ here because that's where I took most of my trades. We've just been in a really, really beautiful 4 hour downtrend. And this is different than the NASDAQ. I know the NASDAQ is in an uptrend, but NASDAQ is just grinding up without any significant pullbacks. If you look here on GJ, we are getting those pullbacks moving up back into a premium. And then you're getting really clean opportunities to short back inside a premium. If we just analyze this 4 hour chart, we started our reversal right here. This is where we got our displacement to the downside. Since then, after taking out these lows, we've just been putting a series of lower lows and lower highs and just really clean price action. So again, we come up, we sweep this high, come up, fail to take out this swing high though, displace lower, chop around for a little bit, strong displacement lower. What do? We consolidate a little bit, move up, offering clean long and bounce opportunities here. So you're finding opportunities on both sides of the market because this is a 4 hour time frame, but ultimately holding that higher time frame trend, tapping into strong imbalances like this 4 hour fair value gap, just perfectly wicking into the midpoint, not closing above, offering strong displacement lower. Again, just clean downtrend, but getting significant enough pullbacks that I could comfortably get back into that trend. So if we go over the trades that I have been taking, it was in this cluster of price action right here. So this was the start of our week. If I put a vertical line right there. So this was Sunday night. This is the price action that I traded, all of this. And basically, I was very aware that we are in a strong 4 hour downtrend. So I know I want to focus on shorts, but when the market initially opened up and then we took out this low and started moving higher, I was able to shift the bias to longs until we got back into a premium of this 4 hour range. So I pulled a 50% fib retracement from this high to this low. And for me, it was very simply I'm looking for longs if we are below inside of a discount of this overall range. So just to make this a bit more clear, that will be our premium and this is our discount, right? It's classic concepts here, nothing crazy. So discount, premium, short when we are up here, long when we are down here. And I was able to catch both sides of the market. And I'm going to go over maybe one or two trades that I thought were really clean opportunities. But this is why I'm trading currencies right now, and specifically yen currencies. We're just getting clean movement. We're getting clean price action to the downside with opportunities for longs as well. The NASDAQ's just not offering things like that right now. So I'm going to move to the markets that are showing me profitability. It's really that simple, guys. So I'm going to go over a trade now and kind of get into the details. All right, so now getting into the lower time frames here on GJ, I'm going to go over what was my trade of the week. So I thought this was the cleanest opportunity of the entire week, and it was taken on Tuesday during the London session. So once again, first thing we're going to do is map out what kind of market conditions we are in on the medium to higher time frame. So if we're looking at this hourly chart, we know that we're in a very strong downtrend. So right off the bat, it would be easier to look for short entries on hourly retracements than it would be to try to spot the reversal on an hourly time frame perspective. So right there, that could help frame a directional bias, but that doesn't mean we could just blindly short every single day just because we're in a downtrend. There's going to be long opportunities. Like if you were trying to short at the low of day during the New York session here at 11 a.m., it's a terrible short entry. Just because we're in that downtrend doesn't mean you're going to get a good entry and you're going to be able to catch that move. So this is really important. First thing I like to do always is map out what the premium and discount is of the current hourly range. So if I pull the fib from this swing high to this swing low, this is our premium and discount. So anything above the 50% right here is our premium, just like I explained earlier. And anything below us is our discount. So we know that it would be easier to look for longs when we are below in our discount right here of this range. And it would be easier to look for shorts when we are back up in our premium. So we are currently in premium coming into the London session. And another thing I want to talk about is the difference in momentum of these two moves. So the two moves I'm talking about is the down move right here and the up move that we had in the overnight session. Now, what is a clear, distinct difference of these two moves? Well, in the New York session, the day prior, we were able to move over 200 pips in 4 hours. So a very small amount of hourly candles, we were able to get this strong displacement move down. Now, we did end up retracing to over half of that move, which to a lot of people may seem bullish, but it's really important to gauge the momentum of that retracement because if it's going to be a reversal, then you're going to want to see strong displacement moving higher, really signifying that buyers are ready to get back in control. This is not that. It took us over 17 hours to just retrace a little bit over 50% of the move that we were able to make the day prior in just about 4 hours. That's a huge difference. So that is huge for me, gauging the momentum behind the swings so that I could determine if this is a reversal or a retracement. So based off of this price action, I decided this is more likely a retracement to move lower in line with the current higher time frame trend. On top of that, we know we are in a premium of this swing high to this swing low from the hourly perspective. So once we gauge that and we're coming into the London session, the London kill zone, so we know there's going to be increased volatility in a moment here. At that point, I have my directional bias and I just want to know how could I enter the market. So I need to find what the relevant levels are going to be that I want to try to play that retracement for short continuation. I need to find those relevant levels. So just looking at the hourly, we have this hourly bearish fair value gap. So that's a key level for sure. Now, it doesn't mean we're necessarily going to get there, but we also have this 1 hour order block right here. So I'm going to mark that out as well. So this up close candle before the downswing is our 1 hour OB. And this was the level I was more interested in just because we are very bearish still on the higher time frame. And I thought, while it's possible we can get up here, if I get a valid entry signal in this overall zone, I'm happy to look for a short to try to take out all of this resting liquidity because I see this as low resistance liquidity. We have no swing low that is really looking like it's putting in a reversal. It's more just a slow grind up with very low momentum, like I explained earlier. So then if we go to the 15-minute time frame, once again, we can kind of narrow down our levels. So we look for higher time frame levels, right? But then we can narrow down the zones on the lower time frame. So once again, it becomes more clear that this order block, this is an hourly order block, but it's this up close series of candles on the 15-minute time frame that I am most interested in. So we keep that zone there. I'm now going to erase the 1 hour fair value gap because I was more interested in this overall zone. So now getting into the 5-minute time frame. What are relevant levels? I really like to play inversion fair value gaps. I need to get an entry signal, and that's a very key entry signal for me as a trader. So if you see here, we put in this 5-minute bullish fair value gap, and this was my entry signal. What I was waiting for is knowing that we are in this higher time frame downtrend, we are in a premium of the hourly range, and we are at a key level, this 15-minute, or excuse me, 1 hour order block. So this series of up close candles is our resistance zone. And if we now tapping into this zone can get that inversion fair value gap model, that's an entry signal for me to then look to take out the most relevant lows that we had put in, which is right here. So this was my draw on liquidity, and this zone was where I wanted to frame my entry off of. So let's play out some of this price action here. So coming into the London kill zone, 3 a.m., if you see, we start to get this increased volatility. So at first, it's looking like this fair value gap may hold up. That's why it's really important if you're trading the inversion fair value gap model, you need to wait for a 5-minute candle closure below that level if you're looking at a 5-minute fair value gap. Because if you're just getting in this in real time when it's starting to tank right here, you may think this is going to inverse and then it doesn't. So it's really important to wait for candle close confirmation. I can't stress that enough. So no entry yet. Now, I took the trade at exactly 4:45 a.m. New York time, so in the London session. And we'll play out the price action until there. So once again, still no entry for me. Even though it looks like we're consolidating inside this fair value gap, we have not inversed it yet. It is still holding up. So there is no trade for me here yet. I'm not going to get induced early and getting caught inside this bullish wick and then, get my stop ran through immediately. I'm not going to do that. I'm going to wait for candle confirmation. And boom, there we go. So that is our candle confirmation. So if we play out some of this price action, I got in. So I got in a little earlier because I ended up putting a limit order, and I luckily got tagged really, really nicely. And this is one of the actually good things about spread on FX. So I put my limit order for about the midpoint of the inversion, figuring we were going to, now that we closed, come back up and retrace into the midpoint. And it literally tapped me in to the pip. And I think if I was trading futures, I may not have gotten my limit order tapped here. So one of the rare occasions where that little bit of spread on Forex is actually going to help you out and go in your favor. And the trade, it just went really clean. We have that London session volatility coming in now. We have our inversion. We're inside that higher time frame 1 hour OB in a premium. See how all of these things begin to line up? We go from the higher time frame to mark out key levels, mark out our premium and discount, then zoom in, narrow down those lower time frame levels to play our ideas off of, and then use the 5-minute, especially on Forex. Using the 5-minute for entry signals is really good. The 1-minute is a bit harder because it's not like NASDAQ. It's not going to move as quickly. Even a pair like GJ, which is pretty volatile, I mostly stick to that 5-minute time frame. but just really clean delivery at that point. And I just wanted to look to take out these lows right here. That's my low hanging fruit target. I don't need to look for more than that. I was able to get with a safe stop of about 20 pips. I was able to capture about 2.7 R, which if you saw in my TradeZella stats, my average R multiple for this week was about 2.6 R. So really in line with the current stats. And boom, really, really clean delivery, straight to the target. That's why this was my favorite trade of the week. I just think we mapped out really clear technical analysis that could offer a strong entry signal. And again, it was on the Forex market, which is very new for me. I have not traded Forex for well over a year, and I'm really happy with how it's going. So yeah, guys, this is really it for the trade. I don't want to make this video too long, but just remember, if you want to see me trading FX or NASDAQ and ES, again, I'm primarily a futures trader, so I'm going to be trading a lot of the indexes. I'm sure that price action is going to clean up soon. I do stream on ASFX TV 3 days a week if you guys want to see me there. But until then, I will catch you in the next video and hope you learned something from this. Thanks.